Literally, they said they wouldn't do it, and then they just did it. Oh my gosh, I was not planning on making a video at 6:42 in the morning here, but look at this. In case you've never seen it before, this is what happens when you type in Dow stock into Google, and it literally shows at the first 15 minutes of trading in the day that it's down 9.71%. That means we hit the stock market circuit breaker again, which shuts everything down for 15 minutes of trading. You can see the little red trading line down there is completely flat, which is usually super volatile. This is insane to wake up to it. Now look, it's happened before in the last couple weeks, but I wanna try to make sense of what is going on, because this is not only insane, but it's also scary. Because look, when we wake up in the mornings and we open up our phone, and lately, even though we know we shouldn't, it's kind of like, no, don't do it. Don't have an Oreo, because if you know you have an Oreo, you're gonna end up having 3 of them. I'm gonna open up my stocks and just see what the portfolio looks like, and then you look and it's like, day ruined. It's kind of like after you have 3 Oreos, you just feel like crap the rest of the day. I'm not trying to bag at Oreos. I love the Oreos, but yeah, I mean, it's like this sinking feeling in your stomach of like, oh, what is going on? So I wrote down some things here. I've been reading about this all night, and I think this at least is helping me make sense of it. So look, I'm not an expert. I'm a dude on YouTube. I consider myself a real estate investing expert, and I love helping you make money in real estate, but these are the things that I'm looking at that are making me feel at least some comfort despite this feeling really bad. It feels like the stock market is in just utter free fall. So number one, I was just on the Wall Street Journal, but look at the New York Times update. Dow down 12%, NASDAQ 11.42, S&P 10.51, automatic trading halt. Oh my gosh. Number one, in crazy times like this, I think we're all looking for the same thing. We're looking for comfort. We're looking for that warm cup of coffee, that sort of blanket, like, oh my gosh, where can we go just to feel like something is safe? And right now, stocks don't feel safe. I think that goes without saying. But I mean, also what's crazy as well is usually safe harbor assets like gold do well, but they're also falling right now. Now, they're not falling as much, which is interesting. Here's, for example, GLD, the gold index fund, right? It's down 4%, which, I mean, when the Dow is down 9 to 12%, at least it's not falling as badly, but still, like, you're looking for that comfort of something, like, what's green out there, you know? And so a lot of us are looking at real estate, which I obviously love real estate, but you can't help but think, well, if, you know, people happen to, you know, sort of leave this world and then all of a sudden a bunch more fixer-uppers hit the market, yeah, that'll be a buying opportunity, but it also means in the short term, we're gonna see a depression of real estate prices. So not necessarily comfort there either right now. And the only thing that really feels super comfortable is cash, which I personally just hate saying, that the reserve currency of the world, the US dollar, the petrodollar, basically oil's traded in dollars, that's why they call it the petrodollar, is the only thing people seem to feel comfort in right now. And you can see that a little bit by looking at the value of the dollar versus different currencies. Look at this. Here's the value of the dollar compared to the pound sterling, up 6.47% from January 10th. Relative to the euro, it's flat since January 10th. And relative to the Canadian dollar, it's up 6% since January 10th. This is the only thing that's like doing well, is literally the dollar. Which then you get to thinking to yourself, okay, Kevin, how do I invest in the dollar? Because I need some comfort. And the problem is, if you're already in the United States, it's kind of like, oh, you already got your money in dollars. You know, the reason it's going up is because other countries are like, ooh, let's go invest in the dollar, which initially when I first heard it, I thought was crazy. Actually, here's a video clip from 2019 when I was walking around Times Square in New York, asking people what they think about investing in the market. And here's some Japanese guys going, oh no, invest in the dollar.
It's like a big camera.
Yeah. So would you buy stocks right now? US stocks or Tokyo stocks?
No. Everything expensive, right?
Too expensive, so buy gold.
Gold?
What would you buy? Would you buy gold or what are you buying?
Oh, gold's so expensive.
It's also expensive. What are you buying? Bitcoin?
No. Gold is the best choice.
It's the best choice. You think gold's the best choice? Okay. What about you? Where are you
Why?
putting your extra money?
Extra money. Cash.
Cash.
Giving cash. Prepare for
Dollars or is it yen?
It's dollar.
You'd buy dollars.
Dollars, yeah.
Buy dollars.
That was actually the first time I started opening my eyes and sort of my mentality to, oh, that's actually interesting. Like other people in countries where they don't feel as comfortable about their currency, they go invest in the dollar. But that's cool and all, like how do we invest in the dollar? And so I don't know. So I did a quick little Google, how do you invest in the dollar? And I got this. Here you go, 3 ways to invest in a strong dollar. But the first thing is all American stocks. And I'm like, you gotta be freaking kidding me. So obviously, if I look up Home Depot stock right now, this is not what I want to be catching right now. You know what I mean? So I scroll down a little bit more, and then I get to this thing, the Power Shares US Dollar Bullish ETF. That just sounds like a scam. I have no idea what that even means, but whatever, I'll Google it. All right, here we go. Year to date, we are up 2.15%. Well, I guess that's a place to put your cash if you want to stay pretty much flat, which is better than losing a bunch of money. But how have they performed historically? Well, that's not terrible. I mean, look at that spike during the recession. Oh, that's really interesting. Look at this. During the panic, like right after Lehman Brothers went bankrupt over here, around September 5th, September 10th, look at that massive spike. 10% spike in the value of this dollar investment ETF. You did immediately kind of see this fall. But what's interesting is it never really fell. From 2007, it never really fell more than at max like 15%, which the Dow dropped like 40 to 45%. That's really interesting. Wow. And then look at its performance lately here since 2014. It's up not a lot, but 25%. It's an interesting way to maybe preserve some money. All right, that's interesting and all, and I've never heard of it before, so I can't really advise you just go sell everything and start going and buy that fund. I mean, if you are, you may as well get your 2 free stocks with Webull using the link below. Just make sure you deposit $100 because then you'll get 2 free stocks valued up to $1,400. That promotion ends tomorrow, by the way. But why is this actually happening? And so here's something else that I'm realizing. I think the other reason this is happening, all this sort of free fall in the market, is because I think the reality of like severe illness and sorry, that's a word that's gonna get me demonetized. The reality of severe illness and like maybe going away, like leaving this planet, is becoming more and more real for people of different ages. Look at this, for example. Here are 2 Chinese medical professionals from Wuhan, which a lot of us are like, oh, I'm not worried if I get, sick. And these 2 people ended up getting it. And I think they're 29 and 28 years old. And, both were 29 years old. And one of them ended up dying. But not only did one of them end up but both of them suffered. But then you also look at this. Here's another headline from today. Look at this. 2 emergency room doctors are in critical condition with, well, that word that I can't say. So one of them is in his 70s, I think. Yeah, here, doctor in his 70s. It's like, okay, like I get it. Like that's the age that you should really be concerned. And like, honestly, like, I don't know if I'd want to be an ER doctor in my 70s right now. But then again, I also get it. Like you are doing, a service, a public good to people at this point. But then this is scary. Like, look, a man in his 40s. Like, come on, seriously? So I think as we start seeing more and more of these serious cases of younger people, more and more panic's gonna happen. See, what's interesting is this isn't really like 2008, where in 2008, Lehman Brothers goes, hey guys, like this is bad. You're all changing all the accounting rules and housing's about to explode and we're gonna not be able to survive here. And then, Lehman goes bankrupt and like, all this financial panic is going on. But I remember the financial panic. I remember playing with stocks in 2008 and going, this is not good for the stock portfolio. But what's fascinating is I remember also sitting in my classes and thinking to myself, all right, well, financial crisis, what does it really mean to me? I was still waking up and going to school, still making my lunch, still going to school, still, going to work at Hollister, like everything was still relatively normal. But what's really happening here is we're kind of combining what feels like an apocalypse with a financial crisis. Like, when are people fighting in grocery stores and toilet paper's running out of the shelves at the same time as a financial crisis? I mean, this is like literally merging Florida when a hurricane's about to come and everybody's ripping everything off the shelves, which I have videos, really old videos from the iReport days of CNN as well, of me looking at shelves being stockless basically from hurricane prep. But there was no financial crisis happening at the same time. You know, it's just like, oh my gosh. I mean, things are so rough right now that you have to ask yourself, now is going to be a really good time to distract yourself from the madness of the financial markets and really think to yourself, what can you do to get educated, to take advantage of the fallout? Like, after the explosion of everything, how are you going to be able to take advantage of all of this? And this is where I highly recommend you join me in the real estate investing course, my daily live streams, the do-it-yourself property management course, and do whatever you can to be the most educated person you can on getting good deals and profiting after this sort of fallout has happened. And just a heads up, this isn't a course that you could sit down for like half a day and be done with it. I mean, there are like hundreds of hours of content that you could go through. So there's endless learning material. You really want to take it in small chunks, but the sooner you start, the sooner you'll be prepared. Hope to see you there. But I mean, if this lack of preparedness panic wasn't bad enough, combined with a financial crisis now, think about the fact that now our lives are totally changing as well because so many of us are I'm probably gonna get demonetized for saying that word, so I'm probably gonna beep that out. Basically, we staying at home and we might not have our jobs anymore. Let me know in the comments, by the way, if you want me to make a video on some suggested jobs. I might drop that really soon because I think it's urgent at this point. Like, this is just, ugh. So we kind of have a triple threat right now. Financial crisis, panic of unpreparedness, but also the fact that we can't work, which is like super un-American. Now, something that's helping me a little bit with this is there's this book by Lord Mervyn King. He used to work for the Bank of England during the financial crisis in England. And he has this concept of radical uncertainty. That is, we are very fearful when we're totally clueless about what's going on. And that's kind of what things feel like now. And he says that's very different from risk. Risk is when you go up to the roulette table and you go, what's my risk? Okay, well, it's approximately 50-50. It's like 49.6% or 49.6% if I go black or red with a little bit of edge to the house. I can calculate that. That's cool. I put a seatbelt on in my car because I can calculate the odds of. But what's going on in the market right now is just straight up chaos, which makes it so different from the 2008 recession, because in 2008, we're like, okay, this many loans are going bad. This is how bad things could get. But this whole latest thing going on is so uncertain that the uncertainty is creating this panic. And this is why every time the Fed tries to step in and comfort us, it ain't working. So I don't know, I think it's kind of interesting to think about the difference between radical uncertainty versus risk as a possible explanation for what's going on in the market. And I mean, I don't know if that gives you any comfort. Like, I'm still looking at the Dow here on my computer going, dude, Kevin, I don't know, man. I don't know about the meaning of life when the meaning of my portfolio just lost another 10% in money, okay? But so I don't know if that gives you any comfort. I hope it does. All right, the last thing that I think is causing this absolute disaster is there is an utter lack of confidence in government right now. And not just government, but also in the Federal Reserve. Usually when the Federal Reserve comes out and says, we're gonna stimulate the market, we're gonna prevent a recession, we're gonna do whatever we can, it makes us feel better. It gives us comfort. But all it's doing right now is panicking the market more. The more the Fed tries to help the market, the more it's hurting the market because of radical uncertainty. Like, literally the opposite of what should be happening is happening. The Fed is basically saying, hey, we're gonna remove risk from the marketplace by pumping a bunch of money into it, and everybody else is going, that This panic really shows just an utter lack of control by our banking system, and it's scary. You know what else is scary? Is a few months ago, the Fed said there was no way that they were going to reduce banking reserves, that they would rather use other tools to create more liquidity in the marketplace. Here's a clip from the Wall Street Journal where they said that.
To meet the LCR, we'd probably raise the level of reserves rather than lower the LCR.
What he's saying is that the Fed would rather provide the extra funds itself than lower those liquidity requirements for banks.
Yet guess what they did yesterday? They said, okay. All banks, you know what? No worries. You don't need to have like that 10% reserve requirement anymore. You could just use the money in your reserves and give it to businesses and households, okay? Like literally they said they wouldn't do it and then they just did it. And now they're saying, well, we don't think we're gonna go into negative interest rates. Okay, whatever you say, can't really believe you anymore. Oh my gosh. Okay, so what am I doing right now? Well, part of me has like tears in my eyes because it's so bad. Like, ugh. Now, I'm saying that because I feel like I am a very rational person. I don't need the money from my stocks. I could literally own 0 stocks and be okay. And I think a lot of us are in the similar position. We're like, hey, look, we've got some money in our checking account, our savings account, we've got a safe job, maybe we own a home and we feel comfort in that we own some other assets. Like, it's fine. I think a lot of us just look at like, this is our retirement, this is our future. We're not necessarily living off our stocks right now. But look, it's painful when the market's getting absolutely obliterated. And I know this is where it's like almost infuriating when people are like, remember, be fearful when people are greedy and be greedy when people are fearful. Like, I get it. Again, rational mind, I'm there with you, broski, but it's still hard. It still hurts. And that's why these panics happen. Because even though we can be rational, we're still human. And faced with radical uncertainty, we kind of lose our shit. So here's my strategy for coping with this disaster, and hopefully it helps you as well. My basic strategy is this. Let's say I have $5,000 to invest over the next week. And let's say every single day this week is going to be a red day, but I have no idea that the market's going to be down every single day this week. What my POV is, I'm gonna take $1,000 on Monday and buy. And then if the market's red on Tuesday, I'll spend another $1,000. If the market's red on Wednesday, I'll spend another $1,000. If the market's up on Thursday, fine, cool, so be it. The market will be up. Then I'll wait for the next red day to buy again. But that's the only way I'm managing to personally cope with seeing these losses, because it gives me this sort of psychological benefit of, okay, at least I'm taking advantage of the sale. I know that means some of my portfolio's still gotten hammered, but at least I'm taking advantage of the sale that's happening today. By the way, a lot of you may not know this because a lot of you know that I have a real estate investing course and a property management course, like a do-it-yourself management course, so you could save money and learn how to invest during this recession. But I also have a course on money, and that course is still in development, but the cool thing about it is I share this kind of psychology and all of my psychological hacks for life and making money in that. So if you resonate with this, you might want to check that out and join. So I think with that, folks, follow me on Instagram. Thanks so much for watching, and stay safe out there. Go find yourself some comfort. Not sure if you necessarily want to rush into buying a dollar index fund, but right now, it certainly feels a lot more comfortable than watching Tesla stock.
And it's gone.